Expected earnings 75%. Expected, all right. Well, so I'm gonna go to $1 for each trade. You guys take how much overall margin you guys using for trade. But usually they're only what I kind of like, what I kind of tell people versus what I do. I tend to break that rule a lot. On defined risk trades, you want 1/3 the width, right? Which is 150, 166 or something on a $5 wide. Mine, undefined plays, which you don't do, so that's kind of actually even that probably doesn't matter right now. But usually like 10% of the credit is where I've upped it to. And as for that, I usually try to tell people leave like 10% of your portfolio amount available for adjustments, rolling dips, whatever may need to be. Okay. But, and then yeah, NDX is a special case because we don't ever get 1/3 the width on that one. Jim got $1. So is that where she's at, Jim? Is $1? Well, we'll see. See if I get it at $1. But yeah. All right. But you also don't want to really put like 50% of your account into one trade. Try to spread it out. You can do, a lot of people do, like, depending on the size, 1%, 5%, 10%. Everybody's different. So you really just gotta kind of consider that. Smaller accounts tend to put more capital into their trades, or yeah, more percent wise. Like if you have a $5,000 account, you're going to be putting more into that, where if you have a $500,000 account, you'd probably be putting a lot, less than 1% into those trades. So if you have a 30,000 margin account, what was that, 10% is $3,000. I wouldn't do more than I wouldn't be doing more than, on a 1/3 the width play, on just call it a $5 wide. So if you got $1.50 in credit, that's $150. I wouldn't put in more than $2,000 worth of capital on that trade, right? But everybody's different. Or another account to be transparent. I still probably wouldn't put down. Ben's rule is pretty good there. Put in what you're okay taking max loss on, right? I mean, and even then, that's still, might be too much. No one wants it. If you put 10 contracts, just like, a simple Airbnb play here, right? That we were looking at earlier. 1/3 the width, perfect. Overall, pretty much perfect play. It's a 30 delta. It's not the best, but we're just gonna use that as an example. That would be my, and even that might be too much for 30,000. But are you okay with losing 4,000? So you have to look at yourself like that. Like, hey, if this trade went sour, how much am I okay losing $3,400? That's what you have to look at. Whether you have a $10,000, $30,000, or $400,000 account, are you okay losing $3,400? If you did, there's my Chewy trade. If you did every single trade, 10 contracts at 1/3 the width, so even call it, say, $1.50 is what you were getting on your defined risk plays. Are you okay losing $3,500? So if you had 10 losses in a row, would you be okay, losing that? If not, then you're trading too much. If you're like, yeah, I'm cool with that, then then you're fine. That could be okay with you. But everybody's different. Like, that's too much for me, even on a $30,000 account. So I get $1 or $1.01. I got $1. Tomorrow, 75 110s. Yeah. So yeah, I mean, like I said, everybody's different. Everybody's thing, but a lot of times you'll hear people say no more than 1%. Smaller accounts tend to put 10% in until they grow it larger, and then you're risking 1% of your account value. If you're risking 10%, you can blow up your account fairly quickly. You just have one really bad week. But if you as you start dropping it down, you'll be good to go. Whereas you only risk 1%, you can survive a lot longer. But it's really hard on small accounts. Like I risk more than that. Well, I should say I have more open positions than I should. Nice, Austin. $2. Good job. Ollie's gonna get into loan shark business. Alright, so we got our earnings plays on here. Let's see. We got other than 5, so unfortunately, if that thing gaps up, I'm gonna be mad. So we're gonna play Smith & Wesson to the upside. And look to play Chewy, somewhat long skewed strangle here, and look for it to gap up a tiny bit on Chewy. We got the 110s and 75s. That is pretty high up there on that Chewy play. I think we should be quite all right there. Yeah, 5%. I mean, on 400,000, that's still a lot, right? But you'll be all right. It's just, it hurts when those trades go sour. But you got to ask yourself is, if you have that 400 grand account, you're okay losing 20 grand? I mean, just ask yourself right now. On those 5 trades you took, are you okay if they all went to max loss? Right? You have a $300,000 account. If you're not okay having a $300,000 account, then you're risking too much. You know what I mean? But yeah, like 2%. And you're putting like 400 grand. You're putting like 20,000 into a trade. Yeah, see, so if you'd be sad, then you're risking too much. Okay, drop it down. Take it down a little bit. All right, drop it to 2.5. I'm sure 10,000 is a whole lot better to lose if you had to lose than 20,000. So, I mean, the odds of all 5 doing that are slim, but you just gotta consider that. And even if 10,000 is too much, then clearly 2.5% risk is also too much of a risk, and maybe you got to go down to 1%. Only put on $5,000 worth of trades at a time. At least then, you got a lot of capital available. A lot, you can take 10 losing trades in a row and not hurt your account significantly. So yeah, and most of the trades, I mean, with an 80% win rate, for the most part, you'd be all right. And especially since you don't trade undefined in that account, you can only lose that much. Otherwise, you're fine. So drop it down a little bit, maybe risk 5,000, 2,500, and then work your way up. Okay, it works great. I don't know, right? Again, everybody's different. How many NDX trades have gone south? 1. Well, no, okay, I take that back. I think I lost one on the 7DTE play earlier this year, and then just like 2 months ago, when the market really took that dip, we rolled 3, and I lost on one of them because I just couldn't get the credit. So 2 this year. Just 2. Knock on wood. Right. Knock on wood. Yeah, see, Jim, that's yeah. It is, Cliff. It's very good. So now just remember, all good things come to an end. and we'll have to switch it up eventually here, and either jump over to SPX, a rut if we can ever get a fill, or go down to the downside. But until I see a clear downside move and trend, I'm just going to keep selling the dips until it doesn't work anymore. I'm playing them as two separate trades, Ben. Right? Because I mean, mainly here on Smith and Wesson, right? It takes a couple of days. It usually runs up for 2 or 3 days, so we can make a lot more. Whereas on that short put, it'll probably, if we see 25%, I'll take it off tomorrow. Especially since we can only make 100% on that short put, even if it runs up for the 5 days. So I'm gonna just manage them separately. That's why I posted it separately and I didn't put the trade on together. I want to manage them separately. So this one's at 25%. We'll take it off tomorrow. And if it's just running, I want to let this go because we can only make so much on that one. So ideally, I'd like to maybe close this Friday and close this one tomorrow. Just got to see what it does. We got 4 minutes here. Just got back to dad. There you go, Gandalf. 30% on Mara. Nice. I wish I had a $400,000 account, then I could take every trade that I liked. You guys are making some money lately on these plays. Yeah, coming in.